Today, I got Mike here. Mike, welcome, Mike. I appreciate you joining.
Thanks, Jonathan.
Yeah, for sure. So Mike joined the coaching program, I want to say about 12 months ago now.
Yeah. Sounds
Okay,
about right. Yeah, right
cool.
about a year. Yeah.
So throughout that process, you definitely came in with a little bit different approach and have slowly been learning how we approach options and futures. So I thought it'd be
Absolutely.
I thought it'd be beneficial just to get on just and have an open conversation and just share your experience. I
Yes.
think it could really benefit others. So
Yeah.
that's our only agenda today.
Okay. Sounds good.
Yeah. So maybe if you could just start letting us know how long you've been trading, just about your journey, how,
Right.
what you
Well,
did before, what you're doing now, and just
okay.
kind of go from there.
Now I'm doing it. I still operate an electrical contracting business, but I've been really trying to focus full time on the trading. So that that takes up most of my time. I mean, there's time where I set the guys up, and then I try and devote most of the day to trading, sitting in front of the screens, analyzing the trades, things of that nature. But yeah, that's what I've been doing. I started all the way back in 2008. Reading books, signing up for on the trading services, doing things like that. Because
Sure.
you know, reading books are great, but it's just you do it professionally to try and read a book, and you come to the realization that you don't know nearly enough you really shouldn't. You have no business after reading a few books. You have no business trading because
Sure.
for me, the journey has all been about risk management,
Yep.
um, which I really appreciate with you because uh, I think that's what your service really you try and bring that home.
It,
So
it's,
yeah,
when you do it for a living, and especially if that's the goal,
right,
it's all about capital preservation. It's
right,
all you're only worth what your trading account is, and I think
exactly,
people get too caught up in the minutia of individual positions
right.
rather than keep your head up and look at the value of your account and manage money.
Exactly. And for me, that's been the struggle. I got into it in 2008, just before the whole market crash, which was, brutal timing, but, you know,
And and what were you trading in 2008?
stocks and options. But, when the shit really hit the fan, I had no idea how to manage. I'd close a position, open a new one, but
Right.
there was nowhere to hide.
Right.
The best thing to do would just be to, take the haircut and get out. But hindsight's 2020. Who could have foretold back then
Sure.
what was going to happen? So
And so how is your, so 2008, that's 11 years. How has your
right.
style changed over the years, or kind of
Well,
what did you start with, kind of like the middle, what you're doing now? Just talk about the evolution of what you learned, and maybe you look back on some of the silly stuff you did in the past.
brutal. There was just. You think you know what you're doing, but you put a position on. For instance, for the last. Since 2008 up until I joined your service, I'd put an option trade on. Really, no idea how to manage it. Either it worked or it didn't.
Okay.
More times than not, you're closing it for a loss. Um, there's some big winners along the way, but for the most part, they were mostly losers. So, I was just trading. You watch CNBC, you see what's going on. You try and buy things that are cheap, but I mean, without really knowing if the options are priced cheap or expensive, it's a recipe for disaster. So,
And were you
um,
selling more options?
credit spreads, naked puts. If I wanted to buy a stock on the cheap and I couldn't afford a stock, I would enter into I would sell naked puts, way below, but yeah, at what I thought was a fair market value for the stock. But
So you were trying to sell naked puts so you would own the stock.
That's right. Right. Right.
Okay, so if the trade would go against you, you'd convince
Yeah.
yourself, that's okay, I wanted the stock, that was part of the plan.
Exactly. Exactly. I mean, the whole rationale was to, I didn't really want to ever own the stock, but if I did, it wasn't the end of the world.
Sure.
But now I'm not, since joining you and really, I'm just about, entering at a really good price. And if it goes against, at least now I know, scalping gamma. I had never even heard that term until,
That's
until I got
unbelievable.
on board with you. So
Because starting to trade 2008, we started working together end of 2017, beginning of
right,
2018.
right,
And just for those listening, scalping gamma, it sounds like a scary term. All we're doing is managing your options with stock.
right,
And I think the bigger lesson, more so than scalping gamma, is that options are just a derivative of stock. They don't have to be so intimidating.
right,
Stock's at 10, you buy the 12 strike calls, you're just buying stock at 12.
right.
So that's a big adjustment, but that's also just learning about the fundamentals of options, because
Absolutely.
with
And the
that,
problem being when you're on a different trade service, I mean, you get a text notification, buy, sell, but they have you don't know what their agenda is.
well, absolutely. And we talk about that all the time, that if you're just getting trades, and people used to use me and still do as a trade service, and it's dangerous because
Right,
if you don't know how to manage the trade, having a trade idea is not really going to help you. If anything,
right,
it's going to hurt, because then you're going to feel that, oh, I got the trade idea from this guy. If he still likes it, I got to stay in it, but I'm losing more than I'm comfortable. But then I don't want to be the idiot who gets out.
right. So, and I mean, and now, when I first started, I was, I thought I knew a lot about options. Turns out I was a big dummy. I mean, even to this day, I think I know. I mean, it's 180 degrees from when I started with you to where I am now.
Good. I appreciate that. It's great.
Right. Like I said, if something goes against, say I buy 10 options and it's profitable. Whereas before, I would just, wait it out to expiration, see where we're at. But I mean, now at least, if I'm into 9 or 10 options and they're in the money, I can sell 3, take some off just like you preach, sell 3, take some off the table.
Love it.
Maybe scalp gamma with the other 3 and maybe
Sure.
let the other 4 ride.
So laddering into those trades have really benefited you?
Well, absolutely. Either laddering in, which is ideal, or
Sure.
missing out on the trade, waiting for a better price. That's kind of where I'm at now, because I'm really, really trying, and I think that's another thing you preach, is not trade so much.
Trade less. And
Right. Because my book gets to a point where it's so large. It's great if you've got a large account and you got a large book, no problem. You can manage everything. I mean, I have the time to do it, but it becomes, it's capital intensive. If you've got all kinds of things going on, and especially the higher price stocks, it's tough. So
it's also a relative as far as account size with positioning.
right.
But I have found, without a doubt, everyone does need to trade less. Trade less,
Absolutely.
pick better spots, and I'm guessing by trading less, you're not taking away your upside at all. You're just limiting your downside.
Exactly, which is really, because I'm a pretty big gambler by nature, and I never thought that I'd be saying this, but yeah, limiting my risk and my downside now is that's my number one goal.
Especially getting comfortable, and I'm inherently a gambler as well. Before I got into the business,
right,
really what brought me into trading is I grew up very close to Atlantic City, very close to the horse track, and I've just always been someone who likes to gamble. But I always liked the numbers and the math behind it. And so that's another reason why trading options, credit spreads and selling options, it's just not for me. It puts me to sleep. There's too much risk. I'd much rather do that research, and once in a while when we find these out of the monies that aren't very expensive, I mean, it's awesome. It's fun. It's not a lot of risk. It's not stressful as you're holding the position. So you put your attention elsewhere and then just let it work. If it works, great. If it doesn't work, no big deal.
Right. At least, I'm at the point now where I put things on, and if it goes against, at least I can sleep at night.
Right.
Yeah. And I can manage it.
So what about, how's your performance been? And by the way, just for anybody listening, we've never talked about this. So just as far as, when we started working together, I'm always talking about take it slow. It's very, very different. Yes. Were you able to follow those rules, or did you get in there right away? No.
No. Again, just big dummy, thought I knew what I was doing. Probably paper traded for about 3 days.
Yeah.
And then, you know what? You just, I can't do this anymore. So I'm just going to get in the mix. And
I could feel that a little bit in the coaching room, because having so many questions while you have risk on.
Yes.
That's how it was for you in the beginning. Now you have more answers for the community than questions. And I really appreciate how much you're helping out the people that were in your exact position. Right. But it takes some time, but
absolutely. And I mean, you can say it until you're blue in the face, but I don't know. It's just.
Do you see it now with others in the room?
Well, yeah, absolutely. I mean, I'm not going to name anyone, but some of the new members, I'm just like, oh God, that was me a year ago. So if that is you, it's fine. You just don't want to bury a hole. You don't want to have the $50,000 account and then you lose 15 grand. And then a year later you feel now where you're more comfortable. There's still a ton to learn and a ton just to go through the experiences of the market. Right.
But you don't want to be digging yourself out of the big hole, because then you're spending the next 2 years trying to get back up to 50.
Exactly. I mean, it wasn't that bad, but again, when I got into a couple of bad lockup trades way too early, ended up working in the end, but I mean, not for me, for everybody else, because I got in way too early.
Yeah.
And, close to the lockup date, they just fell off a shelf, and, I bombed myself out. So
it's crazy though, how much it really is. It's an entry level type of trade.
Yes. Right.
And 10 people get in the exact same position. You will have 10 different results every single time. So
you think it's just your catch you think, I mean, you say it and you think, back then I'm like, well, you know what? I think that's just a catchphrase. He says that to everyone, but it's just nothing said has ever been more true than that. So
that's
what it is.
I deal with that all the time, where people think, oh, okay, here's another bullshitter.
Right.
He's trying to make excuses of why trades aren't working. But without a doubt, the longer that you're in the business, 10 people are in the exact same trade, you're going to get 10 different results every time.
Yes.
And part of the CFA, which is a very intense test, doesn't allow any of the members to talk about returns. So I can't even talk about returns for that very reason, that who knows if somebody knows how to scalp gamma. Are they trading a portfolio, or are they looking at every trade in isolation? Are they laddering in? When did they get in? When did they get out? So there's all these different permutations. So it's a good message to get out, that when anybody is trying to sell you on returns, it's just bullshit. I mean, you just got to go the other way. It's just not fair, but it's something that's legal that shouldn't be.
Right. I guess when you're with a trade service and you're doing exactly what they say, there's a way to quantify results. But I mean, with your method, I think it's optimized, because I mean, you're your own maker. You can, if you just put the trade on and you don't manage it, I mean, it is what it is. I suppose you could, then you can quantify a result. But when you're, like you said, with 10 different people, everybody has a different style of managing it. It's impossible. But I mean, I just want to say, in the last in the last 6 weeks, now that I've implemented, I mean, I've moved away from I'm trying to move away from options and stock. Not move away from it, but I mean, I really love the. I mean, the bond trade is just, for me, that's where it's at.
Yep.
The bonds and the interest rate futures and the pairs trading with the E-mini and the NASDAQ.
Seemed like you hit that really, really good on that down move.
Yes, yeah, and especially it just I just feel that you can analyze it, and when the bands get really stretched, and you ladder into those trades, it's just, I mean, you can see the empirical data is there. You get it at the top, and even if it goes against, I mean, you don't feel too bad because it's already stretched. So
Right.
it gives me confidence to add back on.
You realize you're in the right trade. It's not
right.
like, oh no, here we go again.
Exactly.
And that's why even the structure of the room and having the benefit of saying, hey, it's going against, I'm a little concerned. Are we okay here?
Yeah, it's still the right trade.
And even in this, the trade that we've just gone through, which, maybe I'll walk through that trade as well as a portion of this video. We were along the bub.
Yes.
It was really, really closely guarding the yield curve in case it went offered flat like it did. Then you have to hedge really quickly.
Right.
And I think that going back a couple of months, just my feel about you in the room is you might have gotten frustrated and not understood the hedging portion of that trade.
Exactly.
But now that
yes. Sorry, I didn't mean to cut you off. Yeah.
No, I mean, is that fair to say?
No, you're bang on. And another part of my frustration is, I mean, not with you. It's with, I have to trade as a Canadian. I have TOS Canada, which I use for my charting, but there's a 15-minute delay.
Right.
And
that
then,
sucks.
yeah, it's still better than nothing, but yeah. And then I have to trade. I have to trade the bonds through interactive brokers, which there is margin offset, but the problem was the last time I got into the trade, they said there was margin offset, but then they didn't really honor it, and then risk management got into play. So, I mean, I kind of woke up the next morning and they had taken off part of the trade. So
it's unfortunate, and a lot of people, and a lot of times they're doing that because they don't understand the trade and they don't understand the risk that you had.
That's exactly it. So I mean, I was fly against fly, and then you wake up the next day and you're no longer fly against fly, and I think that's why I put a lot of questions out on the forum to see what I could do. I mean, panic set in.
No, it's been good. I mean, yeah. I get it. You've been very active. You're obviously, you want it real bad. You've been working your ass off. So before I cut you off, I think there was some good news coming when you said in the last 6 weeks. You started.
Right. In the last 6 weeks, I mean, you primarily trading the bonds and the pairs trading with with the mini futures, especially now with the micro futures too.
Yeah, great.
I'm in the last 6 weeks. I've put about 25 grand into the account, so it's been.
My man.
Yeah, it's been great.
Good for you.
I don't expect that. I don't expect to make 25 grand every 6 weeks, but
yep.
I mean,
but now you're starting to get the experience of following this market. And it does go, it's pretty black and white as far as, is there an opportunity or is there not an opportunity? And we had this talk with Susan on the board this morning.
Yes.
Where traders feel like they're always looking for something to do rather than just wait.
Yes.
That
was, I mean, even 2 months ago, that was still me. So.
Yeah. Right. You can't try to make something happen.
No. If
something presents and so. When did you start trading futures? Did you trade futures at all before joining?
No, I started trading.
Oh, wow.
Yeah, I mean, I was trading bonds. I mean, I took bond boot camp.
Yeah, no, I meant before you started working with me, never traded futures at all.
No.
Because I remember in the beginning, you were definitely more interested in the options, learning all that, and then there's been a slow migration over.
Yes, absolutely. Absolutely. Only because pairs trading for me, it just seems like it's an elegant trade. It's probably not for the retail investor. It's more of a professional trade. But I mean, I've got a professional guru who's got my back. So
what do you what do you like about it now versus trading more of just outrights and technical analysis? Because people look at spreads and they think that they don't move enough, or they look at bonds and
no.
why would I trade bonds? It's boring. Can you clear that up? Do bonds move?
Sure, it's boring, but and it may not. The thing is, there's a high probability it's going to work.
Right.
And when you get whacked, you don't want to. At least if you get whacked just trading it outright, I mean, how do you explain that to your family, where you just lost a ton of money?
Right.
At least in a pairs trade, you're trading one against the other, and if it goes against, well, that's okay. You don't get killed. So
especially if you're laddering into it, and it just makes sense. And as much as trading is risking money, the further we can get away from those binary outcomes where it's just
exactly
crossing your fingers, the better. But
right.
So as far as I love that you're working on the bond trade and really got to see the benefit of the trade and see these trades working. For those that are out there that just start the trade right away and get frustrated real quick, can you share how long did it take for you to get really comfortable? And I know you're still growing into the trade, but at what point do you think like the switch went off and you're like, you know what, this is cool. I really want to learn this.
Well, I mean, right away when I joined the service, I wanted to learn it. But I mean, going through bond boot camp, it was like, I mean, I must have went through it 4 separate times, and it was still, it's like it's literally like learning, like trying to learn Mandarin or something. And I don't think it's that hard. But and it just then I started paper trading a little bit, but the more and a lot of the guys on the forum, they're such an awesome help. You ask questions, and then it starts to click. And it probably took me 6 months of going through it, and then literally all of a sudden, you replay the videos.
It just makes sense.
And it's like,
and once you
know what? Yeah, that makes sense.
And once you get it,
right,
then you could start playing the game.
Absolutely.
But that's really the point, that people shouldn't be risking money until they feel comfortable.
Right. And especially the last trade where I got margined out, I had no idea how big a trade fly versus fly is.
Yeah.
Especially, it's okay if you get into it and you don't need to add, but if you need to add, it's a massive position. And when you have, that's why I don't want a big book. So when these trades present themselves, I want to be able to
be there, right?
Right. So.
Well, especially not having the margin offsets. So
right.
Canada definitely puts you at a disadvantage.
At a disadvantage.
What about CQG? Have you looked into them at all?
I have not. No.
Check it out. I'm not sure if they serve Canada. And clearing through Infinity, you can't do that because there's clearly
No.
Really?
Yeah, can't trade through them.
Huh.
I've tried.
No, I know you've looked into a whole bunch of different things. So, I'm glad you could still trade it, and it's nice to see the risk moving over there. Right now, the bonds are good because that's yield curve is super flat. The Fed can go either way. The U.S. president is very involved in his opinion on the direction of interest rates. So, bringing a lot of uncertainty and volatility into the market, which is really good for us.
Absolutely, yeah, for sure. So, like I said, I want to concentrate on the futures trades and then the options trades when really, really great opportunities present themselves. Then I like to get into that too. But I find I can hedge to the downside better with futures than I can with the options, because what I found earlier on is, even though I thought I was trading a balanced portfolio, sometimes the bearish trades, I mean, even in a down market, sometimes they were still going up through It just, I mean, it is what it is.
Well, it'd be really interesting to see, if we go through something like 2008 again,
Well,
how much
right.
more confidently you would feel, because for one, just the options alone, if you're not trading credit spreads and naked puts, we're
Right.
buying options,
Yes.
we're on the right side. So,
Oh, for sure.
I mean, as much as we don't want the market to go down like that,
Mhm.
we're going to do okay. We're really well
Yes.
positioned.
Right.
And the bond volatility would be insane.
Well, and that's, I mean, of course, I don't ever want to go through that again. But I mean, it's kind of exciting to have a massive volatility event like that happen, because now I just feel like I'd be okay. Bring it on. I'm ready.
You could trade. We were trading Bub one by one, and the thing was like in a 25, 30 tick range throughout the day, just bouncing back and forth. Just really, really cool trade. You didn't need a lot of size at all.
Right.
And, that's what traders do. That's another thing that probably sounds like a catchphrase, but traders are there to make markets efficient. That's the role of the trader. It's not to speculate on the direction of Facebook. It's
Correct.
Right. Long-term investor, fine. But if you're sitting there and trading all day, especially relative value type trading, where you're trading indices against
Yes.
one another or bonds,
Yes. Right.
just looking for things to fall out of line, patiently waiting, and when it does, there's a trade, and if nothing shows you,
That's
sit and
okay.
hang out. Go for a walk, go for lunch, do whatever.
Right. But yeah, that's absolutely where I'm at now. Those are the opportunities I'm waiting for. And like I said, if something else in the meantime presents itself, cool. I just don't want to have all kinds of positions on and then miss out on the bond trade because, I don't have the capital to throw at it. So, and it's hard sitting on my hands because I'm not of that mindset.
You gotta walk around. You gotta get away.
Yes.
That's what I do.
Right.
A lot of the style of trading that I've developed over the years first started because when I was with the prop firm, I got into management and I was also trading. So I had to learn to be able to manage positions while in meetings.
Right.
And that's really where my style, came from. But now you got to get away from the screen. You have to find other hobbies. The more you stare at the screen, the more it's going to suck you in.
Right. So, and I mean, I get, it's a work in progress. I'm better at it now than I was a week ago. So I'll just,
Awesome.
That's where we're at.
I'm thrilled for you, Michael. We've gone back and forth. We've had emotional times. We've had exciting times.
Yes.
I can't tell you how thrilled I am to hear that these last 6 weeks.
Oh yeah, they've been great.
Let's keep it rolling, and we plan to work together for years to come. So thanks a lot for doing this. I really appreciate your time. Thanks. And it was
thanks for having me.
Thanks, Michael.